So I want to talk about the Denver market trends. What just happened? Because if you weren't paying attention, they got rolled out on Saturday morning of Labor Day weekend. It was a holiday, but that's when the news happens. That's when it got emailed out. DMAR emailed all of its members the DMAR Market Trends Report. I emailed all of the agents in our database the report itself as well as my breakdown, and we uploaded the market trends video to YouTube. This one was huge. This one was on point. If you have not seen the YouTube video, you definitely want to move over there, grab some nuggets that you can use when communicating with your database. Because right now, we're hearing the news. I mean, there has been incredibly depressing news about what's happening in the stock market or what's happening with losses with different companies, what's happening. I don't even want to go into what I heard about Bed Bath & Beyond this past weekend. There can be a lot of negativity in a changing market. And there is change. And who loves change? Most people don't. Yet today, we have the opportunity to communicate that change, to provide the opportunity for our clients to let them know knowledge is power and to know where best served is in their homes. So let's talk about that, because people will come out. We do a lot of things on TikTok and Instagram, and you know that. And we do a lot of things, and there are folks that come out saying you're just a realtor and you're just propagating the industry. And I have to I don't want to agree with them. I understand their position is what I'm trying to say, right? You have to go in with empathy. I understand that fear leads. I understand that when you are at loss or fear of loss, you're going to pull in. A lot of you guys know my story and its relationship with real estate. I don't want to go into that today, but there's a lot of comfort in pulling inward. But with the facts, we can stand up against it. With the facts, we can actually present a front that says, yes, we are going into a recession. Yes, we are experiencing change. Yes, the stocks are hurting as companies are reporting losses. Yet, I know the stability and the security that I have in real estate will provide the cushion against the change, right? So it's a different temperament. It's not a fear-based reactionary conversation. It's a very proactive, calculated demonstration of the opportunities that real estate provides us. Understanding the DMAR Market Trends Report and understanding the Denver market numbers will help us help our clients in creating stability where they might not have it otherwise. Because we all know the majority of the wealth of the 80% of Americans is in their singular home, the one home, the one roof over their head. Now, a lot of people, the majority of all of the wealth has come through or in excess built through real estate, right? But I'm not even talking about the 1% or even the 10%. I'm talking about the 80 to 90% of Americans who need to hold on knowing that they can weather any storm. And I'm telling you, and I'm not propagating this because I'm in the industry, I'm telling you that this is the safety. I feel deeply passionate, rooted in the knowledge that data provides stability where fear is trying to prevail. This is our opportunity to educate, to get more people to understand whether or not they want to jump into real estate or not. I'm not tied to their decision. I'm tied to the fact that I need to educate and allow other people to make the best decision for them and their families. So let's talk about a few things that happen in the market trends. And in this video, we will have a link to the YouTube market trends video that has it all succinctly in an 8-minute update that you want to watch and forward on to your clients, talking about how real estate is still the vehicle to provide stability and financial success. Because right now the news is coming out not making it sound good in any form or fashion, because we're headed into a recession. And this is what happens. I mean, for the love of man, for the last 2 years, we were headed into a recession at the end of 2019. Then we had a pandemic that threw us into the recession very quick and very deep. Then we start to find our way out of that. And then we have Russia and Ukraine and the risks with China, and China keeps shutting down, putting additional pressure on supply chain issues, which increases the price of everything. Now you have the Fed trying to increase the Fed rate fast enough, raising the cost of everything even further until inflation calms down. Talk about an intense last 2 years. So who are you in all of this? Right? I mean, that's just a question. Are you fear-based? Are you sounding alarms? Or are you calm, looking at the data, speaking to the opportunities that provide stability? Not the opportunities to get rich in a time of recession, but the opportunities that simply provide stability. Real estate does that. Speaking of DMAR, we have our DMAR 2-hour CE class talking about the market trends report tomorrow. In person. Yes, I am so excited. We are back in person tomorrow afternoon. If you haven't already signed up, if they still have room, jump on the DMAR website and sign up for the 2-hour CE. And it's called Warning Graphic Images, the Market Trends Update class. So let's talk about a couple things that were in the report. Active listings were double last year, right? But they are obviously slowing down seasonally. Remember, a lot of this is seasonal. We are entering into the fall. Now, we hit things about 2 months early this year because of the increase in interest rates. But active listings are holding on for a moment. They're still double here in Denver what they were last year, but they are starting to taper off. If that taper continues, and if we see lowering interest rates next year, we could see an additional run on home prices, right? We could. Now, your ability to forecast the future and my ability to forecast the future are not perfect, but I can foretell that 9 times out of 10, 10 times out of 10, interest rates go down during recessions because the economy slows down, interest rates drop. If that happens next year and we see the interest rates drop, you're going to see a lot of this pent-up demand because fear was throughout the industry when interest rates were high. At that point, you'll see the economy is slowing down, but you'll see people stabilize in their job, whether or not they're going to lose it. They'll be willing to jump into home ownership. There will be multiple bids on homes and upbidding. So if you don't want to put in a bid over asking and you want to negotiate, I've had real estate agents tell me that they're like, things have changed because I have a listing and I just got an inspection resolution or an inspection objection that had 25 items on it. It's like, I haven't seen that for 2.5 years. And no, we haven't. We haven't seen it since before March of 2020. Buyers, you have an opportunity right now. We had double the active listings that we did last year. We are starting to see the seasonal taper. If that seasonal taper continues, and at the beginning of the year, heading into the spring, when the buying season picks up, if interest rates start to fall back down again, we will see buyers come out and more opportunity, or I said more demand on the supply. That will increase prices. Or at least we know going into the season, prices will hold steady. And then when that happens, increase. New listings peaked several months ago. The median and average are slowing down. So pay attention to these numbers because they will be highlights. Just last month, year over year, we were at 11%. Now remember, there's a couple of things that we're looking at differently here. Super important for me just to explain this. The median and the average, right? The median is that middle number. The average is you take all the numbers and you divide by the number of numbers. So those high and low outliers are going to sway that number. The median is half below and half above. So the median and average were both at 11% year over year. So there's a year over year, a month over month, and then there's a year to date. So we're watching all of those. There's also something called appreciation. And appreciation is different. It's actually measuring singular homes every time they turn over. And that's typically by CoreLogic or FHFA. Those are different, and I talk about those in the class tomorrow. But we're not talking about appreciation. We're talking about the sales price of homes. The average and median were both 11% year over year last month. Now, if you remember, the fourth quarter of 2021 was hot. People were overbidding $25,000, $50,000, $100,000 over asking. There was a ton of demand. We still had low interest rates. We have to compare. We're comparing now this fourth quarter to last year fourth quarter. It's going to look lower, okay? So keep everything in perspective. When you're reading that report as a real estate agent, look at the month over month, the year over year, and look at the year to date. How are we trending? Because every year there's a seasonal slowdown. Last year was intense. So where are we compared to maybe 2019, 2018? That would be a better comparison than 2021 and 2020. So right now we've dropped to 6.8% average, 8.5% median year over year. Now, I'm still not worried about that. Historically, our year to date, end of year, and the January report for the Denver Metro, the DMAR counties, 11 counties, is 6%. So we're heading back towards a normalized market. It will look a little less as we get there. Think of a pirate ship. Like my favorite ride growing up was the pirate ship, right? It's got to swing to either side before it can start to center again. We're going to have a little bit of that. We'll look a little lower, but it's starting to normalize because it's a comparison number. Days in the MLS grew from 6 to 11. Yes, right? Buyers get out. First-time home buyers, we've got first-time home buyers, down payment assistance, FHA, VA. All of those buyers are getting in right now. I had an offer go in last night with a FHA down payment assistance, $10,000 under asking. And these deals are winning. And if you don't have my new Apply Now link, you need to get it. All of my new emails have it, and we'll be putting it out on the Apply Now on our website has it. We'll put it out on socials. Make sure you're sending your clients, and you as real estate agents or buyers are using our new Apply Now link and our new email address. Close to list was also down, showing that first-time homebuyers are getting an edge. It was 99.41. Remember, we had hit 107. That is not sustainable, nor do we want it to continue because it shuts out first-time homebuyers. But first-time homebuyers, I'm telling you, you got a window right now where we have double the inventory we had last year. That inventory is going to run off towards the end of the year. And if we see lower interest rates next spring, we're going to see an increase in demand and an increase in bidding over asking. You can refinance. Get in now, this fourth quarter, while things are fear-based, right? But I can't tell you, you have to look at your job, your stability, and your finances. But either way, you're paying rent. And if you're paying rent every single month and that continues to go up in the Denver market, we're seeing rent going up. If you're doing that, and we can do down payment assistance, even 2 down payment assistances piggybacked on the same loan, then you need to look at, is this within your financial ability to create stability today and then to refinance when rates go down? Don't overspend, don't get out of your budget, but can you put yourself in a position today and increase that opportunity in the spring even better, right? So inventory, we're at 6939 as of the last day of August. That's double 2021, 25% more still than 2020, yet it's 25% less than 2019. We still have not recovered to pre-pandemic. So we need to be watching those numbers. We're still 25% less than we were in 2019. Nationwide, we don't even have as much inventory as we did in 2020. We still only have 1.6 months of inventory. This is not a buyer's market. Yet, it feels like one. Lawrence Yun had said this past week that we are entering into a housing recession. And I know the news is picking that up and it's trying to create fear with everything else that's going on that I've already talked about. That housing recession does not apply to homeowners. That housing recession applies because specifically home builders are feeling the pain as those people who were under contract a year ago now have higher interest rates and are canceling their contracts, or they've had supply chain issues and haven't been able to get their inventory to market. They're slowing down on permits and starts. Builders slowing down on permits and starts will continue to create an inventory issue in the future, right? Those people who are locked in at interest rates under 4% will continue to create an inventory problem in the future. Those baby boomers who are using a reverse mortgage to age in place will continue to put an inventory crunch on our future. Those first-time home buyers who are holding onto that home because they do have a 3% interest rate and turning it into a rental will continue to put pressure on our inventory in the future. If not now, then when? Because here's what else I know. That manufacturing is still strong. Consumer spending is still up, although small, 0.1%. Jobless claims is still holding on to where it's been as a low for the last couple months. Unemployment barely ticked up from 3.5 to 3.7. We had 300,000 jobs created last month, and there's 11.2 million job openings. All of these talk to the fact that, yes, we all know the economy is slowing. And yes, we all know we're headed into a recession. But the economy's strength heading into the recession, the strength of the homeowner with double the equity we had in 2006, and the inventory pressures we will continue to see in the future tell me that home prices will continue to be stable to going up, and first-time homebuyers have a window today. Well, with our move to OneTrust, we not only offer all of the standard programs, the conventional, the FHA, VA, everything that you would think of in USDA and jumbo and non-QM and DSCRs, all of that. We also have programs that we hold on our warehouse line. We are a direct lender to Fannie, Freddie, HUD. We are a broker when we need to for DSRs and bank statement loans. And we have a warehouse line to do the things that we want to hold on a portfolio line. We have a portfolio line to hold the things that we want to hold, including second homes and investment properties around 6.25 with no points. Fannie and Freddie just can't touch that right now. And it's nothing I could do before, but I can do now. OneTrust offers greater technology, greater speed, and greater customer service. Make sure you have saved our new application link and our new email. Fairway was an amazing place. I was there for 9 years. OneTrust just allows us to serve even better. Well, my name's Nicole Rueth. If there's anything that I can do to help you and plead to you to educate yourself on the data, to acknowledge the fact that right now is the opportunity and season for first-time home buyers, to share this information, share this video, share the market trends video on YouTube. That is how we spread the word. That is how we get the message out there. And we create strength around the opportunities of homeownership. Nicole Rueth, I'll talk to you guys soon.